I think we on, man.
Yes, sir. Yes, sir.
I was waiting for this thing to load up. Yo. Hey, this is AJ the Franchise.
It's your boy Ben the Great.
And this is Talking Real Spill Podcast, y'all.
Yes, sir. Well, we basically, just come to y'all and chop it up about everyday life topics, man.
Right.
And possibly expose y'all to some things y'all may not know about, you know what I'm saying? But with that being said, we are no way gurus about anything we speak of, so we're not teaching y'all or we're not telling y'all to go do anything we say we've done or anything we talk about. But we just bringing y'all along our journey, right? And giving y'all our thoughts and opinions about things, you know what I'm saying? So,
And we was running live earlier, but I think we had a couple of technical difficulties. And if you was watching earlier, we didn't really dive into too much. We was just basically iterating about last week how we talked about how assessing properties and how to go about different funding methods if you wanted to be funded in real estate. We also was saying at the end of that we was going to dive into Forex a little bit more and talk about more about the terminology of it and more just diving into just the terminology and everything about it, So I want to turn it over to my boy Ben the Great right here, and this is Forex Part 2.
Right. So yeah, like he said, man, like my boy said, the last Forex podcast, anyway, we basically learned what Forex was, right?
Right.
How big it is, what it consists of. Who traded, what's traded within it, and simply put, just how great of an opportunity this is, in my opinion, anyway, right? So now that we're at this point, that we know this is something we should be involved in, or at least something that we should give an ear to, is like what's next, right? All right, so cool. So next is basically learning the market and learning how to trade the market, right?
Right.
And so for that or with that, I would definitely tell anybody, before anything, man, get with somebody that knows what they're doing, that's been doing this, that can help you navigate through this Forex thing, and help you learn, what you're trying to learn, man.
Exactly.
And actually know what's going on with this Forex, because as because I get asked about it all the time, and I tell people, yes, it is. This is not super hard to learn, and I feel like it's something anybody can do. Of course, as we talked about on the last podcast, I have my 13-year-old and soon to be my 15-year-old doing it. So I feel like it's something anybody can do, but
game changer.
It definitely is something that takes your commitment to do. So get with somebody that can give you the game and
so
put you on game.
With that, would it be smart for people to do a demo account first before they just start investing their money and diving into something that they really didn't know what they was doing?
Definitely, like almost anybody you get with, because they got groups out here that's they have platforms out here that's teaching people how to trade, telling people. So almost anybody you get with will tell you to get a demo account, and I'm for that and kind of against that, I guess.
Right.
I have to be for that because I don't want to contradict myself, because I kind of started with a demo account too.
Okay.
Right. You want to start with a demo account because in this thing nothing's 100%.
Okay.
Nothing. It's not 100% proof. So you will lose. You will lose.
Right.
You don't want to jump right in this and be losing your money. You know what I'm saying? So get the demo account and kind of see how it goes, and it's because the demo account is fake money, but it's a real account.
Right.
Fake money, but a live account.
Okay.
You see what I'm saying? So you get to experience the live account and not have to risk your own money, which is big.
That's the beauty of it.
That's the beauty of it, right? So let me learn this market and not really have to put my own money in it, right? Now, on the opposite, most demo accounts, I think the lowest demo account I was able to start was like $10,000.
Okay.
Everybody, come on, let's be real. Everybody's not gonna start with $10,000.
Exactly.
So I started with $10,000, and the people I was listening to was telling me to put a .01, which is like 10 cents, or .05, which is like 50 cents. Okay. So 50 cents, and I may lose 30, 40 pips. That's nothing when you have a $10,000 account, right? Mm-hmm. So you don't have the same emotions on a demo account that you have on a live account.
Right.
That's the drawdown from that.
Okay.
And I tell you that because I don't have a good percentage, but I guarantee you, man, like, until you really get in it, you don't know. But when you really get in it, you understand what I'm saying. Forex is huge on emotion.
Okay.
You know what I'm saying?
Yeah.
So that's why now, like, if you listen to the last podcast, I think you heard me say it, man, these last 2.5 months, I kind of pulled myself back, and I wasn't really live trading. I was only learning. Mm-hmm. You know what I'm saying? And part of that was because the information that I've been exposed to has changed everything I know about Forex, right?
Okay.
So that demo account, man, and that live account is tremendously different, man. You know what I'm saying?
It's different from playing with like fake money versus you dealing with your own money. Like, damn, I done lost that $50 or I lost that $100. Like it hit different just playing with with fake money. Yeah,
you know what I mean. So you definitely want to. I think it depends on who you get with as far as learning and also the type of person you are. Okay. You know what I mean? Now, if you have the right mindset, you know what I'm saying, you can get in this demo account and you can kind of see what's what, and you can understand, and then boom, when you're ready, and you can go from there. You know what I mean? So that's going to kind of depend on, every person. You know what I mean? Each individual. You know what I'm saying? But aside from getting with somebody that could teach you, man, you want to learn what type of trader you are. Mm-hmm. You know what I'm saying? And when I say what type of trader you are, when you get with whoever's teaching you or whatever company's teaching you, you want to learn, are you going to be a scalper? Are you going to be a intraday trader? Or are you going to be a day trader?
Mm-hmm. Okay, so kind of break that down to the people. Like, what's the difference between those three?
Okay, so your your scalper. Mm-hmm. Those are scalpers are usually they trying to get in and out the market.
Right.
You don't want to spend too much time in the market. You know what I mean? Okay. Scalpers of course, Forex is broke down into time frames, sessions, and all that. So you have monthly charts, you have weekly charts, day charts, 4-hour charts, hour charts, 2-hour charts, 30 minutes, 15, and so on. Okay. Right. So if you're gonna be like a scalper, the highest you go on, I think, is maybe like an hour chart. Mm-hmm. Your markup on your hour, as far as your support resistance, your trend lines and things, which we'll get into later. Okay. And then you kind of scale down to your 15 and your 5 minute, right? Okay. And you're trying to get your 10, 20, 30 pips and get out of there, right? Okay. And that's it. You're trying to get out of there. Get your money, get out, right? Okay. So that's your scalper.
That's your scalper. Okay.
So then you have your intraday. Your intraday is usually, you move from kind of like the 4-hour to the hour to the 15 minute. You know what I'm saying? You're kind of intraday. You kind of catching the swings. Okay. And again, with how the market moves, that's something we're getting into. Right. The market moves. It'll swing up and then it'll swing down. You kind of trying to catch that swing, catch you a good swing, and you get out of there. Depending on what pairs you're trading, a good swing can give you 30, 50, 60, 80 pips or whatever. And, you get that and you good. Mm-hmm. So like I say, you may start the 4-hour, scale down to the hour, drop down to the 15 to get in your trades, things like that. And then you have the actual day trader or the position trader. Mm-hmm. And that's where, you drop, you're starting at like maybe the weekly to the day, dropping down to the 4-hour, and maybe dropping down to the hour to actually get in your trades to try to get the best possible entry as possible, Okay. And, day trader is just as it sounds. Like, you may be holding a trade for 1 day, 2 days, 3 days, weeks, depending on how that trade is going, you may even hold it, for months. I've never
long term.
Right. Okay. I've never actually met somebody that held a trade for months, but I've heard of it, So it just depends on, like what you're into or what you've learned and who you're learning it from. You know what I'm saying? Right. So that's big. You definitely want to learn that because each one of those have their own principles or laws, I guess as far as like, where you start, where you mark up, how you drop down and things like that.
Okay.
So that's real big.
Okay. And I heard when you were saying earlier, you were saying something about like getting your 30 pips and getting out of there. Mm-hmm. So like for the people that don't know what pips are, like can you kind of like break that down? Like what is a pip?
Okay, pip basically is just kind of like a part of how you calculate your winnings or losses, right?
Okay.
And a pip is basically just means it's like how you calculate movement.
Okay.
Either up or down.
Mm-hmm.
So let's say 5 pips. That just means price moved up 5 places or down 5 places. You know what I'm saying? So if I started at 20.0043 and then I'm at whatever 0.0045, whatever, I moved up 5 pips.
Right. Now, so that's the movement, basically.
That's just the movement.
Okay,
you know what I'm saying?
I got
you could say points or steps or whatever.
Okay.
So pips is just how much I've moved either up or down in any direction. You know what I'm saying?
Right. Okay.
So that is like I say, part of how you calculate your earnings or losses. You know what I'm saying? Mm-hmm. Because it's pips as well as how much you put on each pip.
Right.
And that's the beauty of Forex, because somebody could tell you, man, I got 30 pips today, right? Or they could say, man, I got $30 today. I made $30 today.
Right.
But on that same move where you made $30, you probably put $1 a pip.
Right.
And you moved 30 pips.
Mm-hmm.
I probably put $10 on a pip, and I moved 30 pips. So now your $30 is $300 for me.
For you, right?
You know what I'm saying?
Okay.
So same thing with some people put 10 cents on a pip when they first start out, and that's $3. So the same move, I made 3 cents. I made $3. I'm sorry. Right. You made $30. He made $300.
Right. Okay.
That's the beauty of it. You know what I'm saying? So it's all about how much you're putting on it. You know what I'm saying?
Yeah.
And that again comes from your understanding of it.
Right.
Because if you understand the market and you really know, hey man, this is about to shoot up or this is about to shoot down, then you'll feel more comfortable putting $10 on it, $100 on it, whatever the case may be. So the understanding of the market at the end of the day is the biggest thing.
Okay.
You know what I'm saying?
Gotcha.
Which is like the next thing I want to talk about is like learning the, you got with somebody, you kind of learning the market, how to trade the market. You're starting to learn the behavior of the market, or you need to learn the behavior of the market.
Right.
And when I say the behavior of the market, I mean as far as like uptrends, downtrends.
Right. So kind of break that down. What's the uptrend and downtrend?
Okay. Yeah. So an uptrend is when the market is moving more in the upward direction. Right?
Oh, okay.
Because with this Forex, it never just shoot up, straight up, or straight down.
When he says it, you mean like if you're looking at the
market,
graph
or the price, right.
Yeah.
Right,
Okay.
Right.
All right. Yeah.
So when you're looking at the charts, you're gonna see candlesticks and things like that. That's what we call the market.
Mm-hmm.
You're never gonna see it just shoot straight up.
Okay.
And just shoot up, shoot up, straight, shoot up. For the most part, it is shoot up, come down, shoot up, come down, shoot up. Things like that. And so it gives you certain points, boom, 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 and it starts a trend.
Okay.
you know.
So that's the terminology, uptrend, downtrend.
And that was those was just certain terminology of Forex.
Okay.
And you know, especially for the young people, they should definitely know what trends are. Exactly. You know what I'm saying? Exactly. One person do it, the next person do it. And that's kind of how it is. Like, it go up, it go down, but hey, I'm going to go back up, I'm going to go back down, I'm going to go back up. And it's trending. It's doing the same thing. It go up, it go down, but then it go up again, it go down again, it go up again. And that's the trend that it's going in.
Right.
But based off of those points, you'll see that it's moving up.
Okay.
You see what I'm saying?
And so with that being said, like if I'm looking at a chart and I see that the graph is going up, or the market is going up, like should I buy or sell in that particular sense? As a beginner trader, you definitely this is something I was told, didn't listen to, got slapped in the back of the head or whatever, and then understood that I should have listened to. Right. As a beginner trader, you definitely want to go with the trend, right? So if a market is going up or if it's buying, I only want to look for buys. Okay. So when it's going up, that's called a buy. When it's going down, it's called a sell.
Down, yeah. Okay. Uptrends, you got it's called a buy, or it's going to be called bullish, or also like going long.
Okay.
Downtrends, you got like downtrend, you got sales, or you going short, bearish.
Okay.
Right.
Okay.
So yeah, definitely as a new trader, man, you definitely want to try to trade with the trend.
Okay.
And I say try because, man, I heard it, I was told, and of course, you know me, you want to be hard-headed thinking I know more than anybody else. I'm like, hey, I see us finna do this, I'm gonna try to do this, you know?
Right.
And had success with it, and also big failures with it, you know?
Okay.
But you know, in Forex, most losses, we don't call them losses, we call them lessons, which and they are if you take it as that. You know what I mean? If you learn from it, then it is a lesson.
Exactly,
but if you continue to do the same thing, then it's just a loss after a loss after a loss.
Right. It's knowing how to basically like balance your losses at the end of the day. Like
honestly, that's one of the biggest things is kind of what you're saying is money management. You know what I'm saying? Leverage and money management, which is something we'll get into later. But it's like a lot of people I don't think will really talk to you about that. But me personally, besides actually learning the market, I think money management is one of the, if not the most important things in this. Okay. Because just to veer off a little bit, man, money management can be everything. Because just to give you a little example, let's say I'm doing trades, right? Some people trade and they do one-to-one trades, meaning I'm trying to get 30 pips, but I'm also risking 30 pips. Right. So if I lose 30 pips, but if I win 30 pips, right? Me personally, I try to do nothing less than a 2-to-1. Meaning
the ratio.
Right. Meaning if I'm risking 30 pips, it's only to get 60 pips. And the reason I do that is because of money management, right? So let's say I risk 30 pips on this trade to get 60 and I lose, right? So now I'm down 30 pips, right? But let's say the next trade I actually hit. So I hit 60. Now I was down 30, but now I hit 60, so I'm still up.
Yeah.
That's why money management is so important, because money management actually allows you to lose and still end up being a winner. Right. Which is important because anybody that's real with you, now hear what I say, anybody that's real with you, because a lot of people not real. Yeah. Anybody that's real with you is going to let you know from the jump, you will lose in Forex. Okay. You hear me? It's nothing 100% about Forex. Okay. Because at the end of the day, it's just a market. Yeah. You know what I'm saying? It's just, we don't know 100%. Because if I knew 100%, guess what I would do? Right. I'll put you on game, tell you 100%, you'll put somebody else on game, and we all be on. You know what I'm saying? Exactly. So, it's nothing about Forex that's 100%. So, money management is huge. Right. You know what I'm saying? And that's what I think a lot of people don't emphasize.
Mm-hmm.
Now, a lot of people may say something about it, but they don't emphasize on that, and I think that's
kind of break
huge.
it down for them.
Yeah. It's huge, man.
Right.
Because money management will allow you to, like I say, lose but still be a winner.
Yeah.
And when you're doing that,
do
and when you're doing that, it allows you to be. It allows you to be okay with losing.
Right.
You know, because again, like money management is one of the biggest things, but also the psychology of Forex is huge too. Because emotions in Forex is what causes a lot of people to lose.
Right. I see.
Jumping out of trades too early just because I get scared. It's coming down and I think it's finna hit my stop loss.
Or if you took a loss or something
like
that.
Or if I took a loss now,
like you jumped out too early, so you actually missed what you were trying to do. So I definitely understand.
And that didn't happen to me a lot of times, man.
So you were saying something about, like, when I'm looking at the charts, like knowing the candlesticks and stuff. Like, what is a candlestick for the people who don't know what a candlestick or indicator is and stuff like that?
Well, that's a good question actually. Candlesticks are super important, right? Now I said like knowing the type of trader you want to be is important, right? Then you got learning the behavior of the market, right? Now you need to learn: are you gonna be a trader who relies more on indicators, or are you gonna rely on market structure or price action? Candlesticks fall under market structure and price action.
Okay.
Now,
I got
you. Indicators is cool. You got. Man, you have great indicators, you have good indicators, you have bad indicators, you have horrible indicators, right?
Okay.
Now, when I first started out, man, I ended up looking at a guy on YouTube, and everything I did was based off indicators.
Right.
And believe it or not, it actually worked at the beginning. I'm talking about work like to where, like, within my first, I started on a Thursday trading.
Right.
Like really trading.
Okay.
On a Monday, man, I hit for $1,200.
Cool.
And that was based off of indicators, man. Excuse me. You know, so
right.
It really worked, right?
Yeah.
But when it didn't work, it really didn't work. You know what I'm saying? So so imagine that, right?
Right.
So you're gonna have to decide whether you're gonna be a trader who trade, you know, relying on indicators or relying on market structure and price action, right? And again, that may end up being dependent on who you learn from and how you learn.
Right.
Now, I can't tell you how to decide that, but I can tell you for me, you know, from what I've learned and things like that.
Okay.
Here in my learning lately, the past 2.5 months,
right.
I'm almost like a naked trader.
Okay.
Which means I'm only looking at the charts.
Okay.
I'm only looking at market structure, price action. I feel like that's the best way to do it. Okay. Because now here's the thing. Because even though it is some indicators I still will use and I still do use, so it's not to just dismiss any and every indicator. But
so an indicator, just to break it down a little bit more, an indicator is basically something that's going to alert you like on the action of what the market is going to do, whether it's about to go up, go down, if it's a good time to jump in, jump out.
Right. Yeah. An indicator is, for the most part, something that's kind of is like it has gathered some data based on like previous, market structure, price action, or whatever, and it's saying based on this market should do this or should do this. You know what I'm saying? Yeah. So it's kind of like relying on somebody else or something else. Right. That's the only thing. Okay. And like I say, man, it's great indicators out there. Don't get me wrong. I'm not saying don't use indicators, because definitely indicators I still use, like such as the Fibonacci is wonderful. It's great. I still use the Fibonacci. The certain exponential moving averages I still use, the 20 to 50, stuff like that, the 200 I still use, you know what I'm saying? Okay. So it's still indicators that's wonderful, that's great, that I actually still use, but those are based off of like past data gathered up, and it's trying to predict a certain future movement. Right, you know what I'm saying? Which is cool, but it's nothing like, that's just like in life. It's nothing like being able to depend solely on yourself.
Right.
You know what I'm saying? Okay. So it's cool to use the indicator, but when you can look at this market naked and say, man, based off of what I see, this is going to do that and be correct, it's nothing greater than that. Right. You know what I'm saying?
Okay.
Nobody can take that from you because think about it. Let's just say next year, that indicator that your main indicator is no longer existing. What you going to do now? Right? Okay. So, again, it's nothing like depending solely on yourself because one thing I always taught, man, educate yourself, right? Add value to yourself. You can't take me from me, right? So what I know and what I use based off what I know, you can't take that, right?
For sure, yeah.
That's the best thing, right? So that's, what I'm saying, as far as indicators, again, like I'm not dismissing or, shitting on any indicator because I guarantee you, man, like indicators have made me money. Yeah. Of course, they've lost me money too.
Exactly.
You know what I'm saying? But
it could be a good thing or a bad
facts.
thing. Yeah.
So if you are using an indicator, I tell you this, it should only be as a confluence.
Okay.
You know what I'm saying? And when I say confluence, that means like, okay, I think this. Let me see what this indicator say. Oh, it's also saying this. Good. Not solely, man. Let me jump in the market. Boom, this indicator saying buy. No.
Yeah.
You should be able to look at the market first and say, man, I see a buy. Let me see what this indicator say. And it's also saying buy. Let me buy. Yeah. That's
and that
how you want to look at it.
Goes back to like we were saying, like always go back and like do your research. Always
facts.
Don't just go off of anything that we tell you. Always go do your research and know a little bit more about the market and how stuff works and just learn how the different trends go and the different movements and all of that stuff go because that's actually gonna make you more profitable in the business.
Right.
So
but man, as far as even with that, man, the like learning the market itself, man. You know what I'm saying? Learning how the market moves and things like that, man. Learning uptrends, downtrends. Learning that the market moves also sideways. You know what I'm saying? That's gonna be big because then you're gonna understand things, and like I say, then when you add the indicators, that's gonna just add more value, right?
For sure.
So market structure is just seeing the market and knowing what it's telling you because the market tells a tale. It tells a story. You'll see. As far as the uptrend, you got to learn what the uptrend is. The market structure tells you I'm in the uptrend, or I'm in the downtrend, or I'm moving sideways. Okay. You got 3 different movements: up, down, sideways.
Sideways market is
consolidation, basically. But the market will tell you I'm moving up, I'm moving down, I'm moving sideways. And how it's telling you I'm moving up, you'll have a high, then it'll drop down. Like I said, the market never just solely moves up and keep going up. Yeah. So it'll move up, then it'll move down, then it'll move up again. But when it move up this time, it'll break that previous high that it set. So it'll pass that, and then it'll come down again, and it'll set like a higher low. Okay. Then it'll go up again and break that high. Right. And it just gives you point, and those points are just continually going higher and higher, showing you an uptrend. It's kind of like a ladder, something you can step on, boom, 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 boom. And same thing for a downtrend. Okay. It gives you down, low, and then it gives you a high. It gives you a lower low, then it gives you a lower high. Okay. Point, and that all those points just create lower lows, to where you can set a trend line. Trend line is something we'll get into later also.
And that'd be part 3. Yeah.
Right.
We'll dive a little bit more into it.
We can dive so far into it, So all these things gives you market structure. You know what I'm saying? So it just shows you or it allows you to read the market and say, okay, I should be looking for buys, or I should be looking for sales, or this market
because
is moving.
Because you're seeing the trend going up and down. Right.
Or this market is moving sideways. So right now, you know, as you kind of learn sideways, I'm kind of gonna just chill. You know what I'm saying? So you'll kind of get the idea of it from market structure.
Right.
And then just from market structure, knowing the high, you know, the uptrends, downtrends, side trends, you'll start to pay attention to price action. You know what I'm saying? And price action is my God. Like that's golden.
Right.
You know, that's something we'll get into. I guess we'll kind of have to get into, you know, on the next episode. I see we kind of winding down.
Yeah, we winding down, man. So, you know, but yeah, I definitely take all of that in, y'all. And we are going to dive more into, you know, like he was saying about the price action, a little bit more into the terminology side of it. But he did give a lot of game out just about, you know, just the basic terminology and, you know, what you looking for whenever you know, looking at these charts or analyzing charts or, just the knowledge of being in the market, you know.
Right.
So we're going to come at you again. It's going to be a part 3 of Forex. We'll let y'all know when we're going to do that. But we also want to thank El Salsa, you know, for the platform. We want to thank Salsa always, you know, for this opportunity and, you know, coming at y'all, be able to give y'all this information that we come give y'all every Tuesday and Thursday.
Appreciate y'all, you know what I'm saying, tuning in, man. And definitely, man, anything that y'all have, anything y'all have to say, man, whether you like this information, whether you agree or disagree with it, whether you have some value to add to it, man. Because again, I'm on a journey in Forex. I don't know everything, so if you have something you can help me with, man, please, help me with that. So definitely. And you can always do that on all platforms. You can just look us up on the Talking Real Spill podcast. Facebook, Instagram, Snapchat, anything like that, and we'll be looking forward to if you got anything to tell us, or if you got anything that you want us to elaborate on in the show. Definitely just reach out to us, inbox us, comment us, and we'll be trying to get to it as soon as we can, and we'll definitely be looking forward to doing that in the next show. And definitely for any of these Forex comments, man, if you have, again, like I say, if you have any comments, man, if you have any questions, if I move too fast, you know what I'm saying, if I didn't touch on something, again, this is not everything, you know what I'm saying, so we just starting. But if it's anything you want to hear, you know what I'm saying, if I didn't touch on something you want to hear it, definitely let me know, man. Hit us on Talking Real Spill podcast on Facebook, man. Leave your comments, your concerns, or any information, man, and get with me on that. Definitely.
And if there any sellers or wholesalers or buyers that is looking for different opportunities, or if you're a seller, you're trying to sell your property, a wholesaler, if you're trying to get a deal done, if you're a buyer and looking for properties, you can always hit me up on my website under Anything Is Possible Enterprises.com, or you can reach me on Facebook under Talking Real Spill podcast, and we'll definitely be looking forward to doing business with you guys.
Definitely, man. Again, this is Talking Real Spill podcast, man. And to the next discussion, man.
Yes, sir. And it's AJ the franchise.
It's being the great.
All right, man. We'll catch y'all next Tuesday, man.
All right.
Yeah.